Morning. This is the video newsletter for buysellshort.com for Sunday, October 19th. Market on Friday did pretty much what we expected it to do and called in the video. We got our couple of 100-point upside move. Here we have the Dow 15-minute chart. Action at the end of the day was not what we wanted to see, really. As you can see on the 15-minute time frame, the 200-day moving average in this time period has acted as pretty strong resistance over the last month or two. Actually, it goes further off the chart. Right now, that 200-day moving average is at 89.40. We broke above it when it was at 9K mid-morning on Friday, saw the extension, and then fell back below this point at the close. Same thing happened a week ago on the monster rally we had. So come Monday morning, we really need to see the 50-day moving average. That's 8,800 for all intents and purposes hold. If this holds, we should see another attempt at a breakout of this resistance line. If it doesn't, we'll be looking to probably see a move back to 8,400. Dow daily chart, we've been hugging the 8-day moving average. Again, what this chart shows us is we need a close above 9K. Bottom for now, the double bottom we called is still in. Did not want to see that weakness on Friday, however, into the close. So it kind of puts things up for grabs a little bit. Resistance now is at 9,500 on the Dow. SMH, still a disappointment. Got up to the 8-day moving average and then sold off. It's been pretty damn weak over the last 2 weeks. And, we had good earnings from Intel. Market threw a tissy fit. So everything's pretty oversold technically wise on the SMH and pretty much everything else. But traders and funds are just selling and going to cash on the sideline. There's talk that we haven't seen enough fear yet or capitulation. Let's pull up the VIX chart. Actually, I've got a different VIX here. This is the current VIX from the first week in September to now. So over the last 6 weeks, we've gone from a 20 reading on the VIX to 80 this past week. If we go back to the last time we had extreme volatility like this, we're going back to September 11th, 2001. VIX went from 20 to 44, then the old high. And then over the next 6 weeks, as you can see, the VIX slowly trended lower and got all the way back. So if we pull up the daily chart from back then, here's the daily chart from 2001. We bottomed out here after September 11th, and then slowly over the next 6 or 7 weeks, the market made its way all the way back up to its 200-day moving average. I mean, it was 20% plus off from its 200-day moving average. If we now go to the current Dow chart, the 200-day moving average is just barely coming into focus right now. It's at 11,880. I'm not saying we're going back there. I would expect it to come down, but we're 30% off that level. So if we follow that same path over the next 2 months, we should at least see a move up to this area. Credit market is still pretty tight. The LIBOR rate has come down significantly. The spread between it and the Treasury is down to 397 basis points. Last week it was almost 500 basis points. So it's come down quite a bit, but it's still way, way up there. NASDAQ bullish percent, we bottomed out there a week ago and we've been slowly moving higher. Kind of a positive divergence, as you can say, because the NASDAQ has bounced big time, but it's been retracing back and forth. So still a lot of fear in the market. They say there's no capitulation, as I mentioned, but there is. Funds are getting massive liquidations. People are bailing on their 401k plans. Hedge funds are liquidating everything, moving to cash. Some big hedge funds have said they're not even going to invest in the market. VIX is at 80. Quick update on the VIX. What the VIX tells you is when the VIX is at 80, it tells you that the market is going to move in 800-point ranges. When the VIX is at 20, it moves in 200-point ranges. Simplified version of what happens. In extreme panic and fear markets, market moves a lot bigger up and down. So right now the VIX where it is, it's not going to stay up here for forever. almost everyone's been washed out. This market sucks. And as I mentioned, if we go off the 2001 chart over the next several weeks, we should see the market slowly trend nicely higher. Another issue with this market right now is playing individual stocks. It's the reason we're actually sticking to ETFs. Stocks will do absolutely nothing when the market rallies 800 points, and then when the market retraces 100 points, you see, stocks losing 10, 15, 20%. FTWR is an example. On Friday, stock lost 30% when the market sold off initially, and then when the market rallied, it gained nothing. Funds continue to liquidate. Traders are afraid to buy anything, which is reason we're sticking to ETFs. Now, one ETF we might keep an eye on this week is the USO, United States Oil Fund. We called a short here back in July at 117. It hit 56 on Thursday, all over 100% drop, or 100%, 50% drop. Oil's down 50%. We pretty much expected this going into the election, that something was going to happen. Commodities have been destroyed, but we're at an RSI under 30 on the USO, so it's worth keeping an eye on this over the next couple of days, because the last time we got to an RSI level like this for so long, the USO went from 72 to 89, so it was about a 17, 18% rally on the USO. 20-day exponential is 20% higher right now, so we could see a snapback rally on the USO. So we're going to keep an eye on that Monday and Tuesday. One way to play that as well, sounds counterintuitive, but the refiners usually do well when oil prices come down. VLO is one of the bigger ones. If this one has a move back up with oil, you're looking at a move from the 18s to 21, about 10 or 15%. So this is one to keep an eye on for a bounce play on a move possibly in oil near term. Couple of quick stock mentions. ELN, they report earnings this upcoming week. Stock is in a bullish falling wedge. Its support is at $8 right now, resistance at 10. We get any positive news on Tysabri usage, which I expect has gone up despite what the analyst morons have said, and we could see a nice pop to 11 on this one. Another one we're watching was a mention a week or so ago, PMCS. Not one we're going to add right now, but it's one to keep an eye on. Breakout is 550 here on this very steep bullish falling wedge. Again, ETFs are pretty much where our focus is going to be. The DIA calls that we called at the bottom on Thursday, 100% gains in a day. Don't like the candle that we saw on Friday, but if we see a pop up over the next few days, 95 to 96 on the DIAs is our target. Remember, we added January calls on this for this very reason, because we are going to see chop in the market over the next couple of weeks, but we should, into year end, start to trend slowly higher. Back to the 15-minute chart. Again, what we're looking for tomorrow morning is 8,800 to hold and break out a close over 9K and a confirmation on a close over 9,200. Very tough to call any stock plays right now given the extreme volatility we're seeing, so we're just nibbling with some alerts intraday. High cash is the best way to be right now. We're kind of looking at oil, but the last few oil runs have been long traps, so even any entries in the USO would be considered very, very small with pretty damn tight stops. So that's really it for the video going into tomorrow. Stay safe, and I'll see you guys in the chat room. Good night.